What's going on, everybody? Welcome back to the channel. So Daniel and I had this little series called First Glance, where we take a look at stocks that have just popped up on everyone's radar. Today, we're talking about Skills, ticker SKLZ. And in First Glance, we give you our honest first reactions to different articles we find, our initial research, and hopefully, you can also learn how we think a little bit, because we'll say we'll tell you what questions we ask ourselves when doing this research. So yeah.
Yeah. So as Matthew said, we're going to be taking a look at Skills today. The stock has been running quite a bit in the past few days. So we're going to take a look at why the stock is running. Um, really more, just try to learn more about this business and see if this run could potentially make it a good investment or if the run could continue.
Yeah. So usually what we do on this channel, on this series, I guess, is we look at why it popped, the stock price a little bit, and then we look at the business overview. We do first glance at like investor relations stuff, and then maybe their last quarterly report, and then we tell you what we would look into next as the next step in our research, and kind of our thoughts on the company after initial looks. Yeah. Let's get started.
All right, let's do it. All right, so this is the stock right here. This is Skills Inc. Ticker symbol is SKLZ. And if we take a look at a 1 month chart, we can see that on January 4th, it was trading at only $18.20. And today it is trading at $22.22. All right, so this article right here talks about why the stock actually jumped today. So it says Skills spikes 21% after Cathie Wood adds the former SPAC to ETF. So it looks like Cathie Wood from ARK Invest added Skills to her ETF. And it probably just means that a lot of other people are buying into the stock to try and follow what she's doing essentially.
Yeah. And I think it's kind of interesting how she has this network effect now where she can, it's like people are just watching their daily trade alerts like hawks and just looking for like a new ticker, which is honestly probably a pretty smart strategy. But I don't know. It's kind of, I think it also gives some validation to SPACs, because I know sometimes there's that stereotype of like
Yeah.
a lot of them are not great investments. But here we have ARK Invest investing in a SPAC. We have Tattooed Chef, which I believe was a SPAC, if I'm correct. A lot of people are on board that one now as well. So it's interesting to see for sure. If you look at ARK Invest Next Generation ETF, which I believe is where Skills is being held, Skills is actually the smallest position down here, with 0.19% of the portfolio being allocated to Skills. So I think in that article Daniel was just showing, it said it was 0.07%. So it looks like they're slowly scaling up their position. But it's not quite as high conviction as a lot of these other stocks, obviously. But we'll see. Maybe they have bigger plans for it. Maybe they do plan to make it a 1, 2, or 3%er. And at that point, I think they'd be taking it pretty seriously. But yeah, so what I like to do when first doing research is go straight to investor relations. And all you have to do is just type in the company name, investor relations. And at Skills, their mission is to connect the world through competition. They have the technology necessary to provide fair and secure competitive gaming experiences for users.
Yeah, so we did a little bit, like just a little bit of research before this, and it looks like Skills is trying to change how mobile gaming is done. Like they don't really want to do pay to win, which is essentially like it doesn't matter how skillful you are at the game, you can just spend $200 and you'll be ridiculously overpowered and be able to win against everyone else essentially. But that's not really a fun way to play the game because like if you're actually good at the game, then someone who just pays more money can come in and just beat you every time. That's what Skills looks like they're trying to fix. They're not they're just not a platform that looks like they're just trying to pay to win. They want the actual user experience to be based on how skillful you are, and you will get rewarded for how skillful you actually are, which
Yeah,
also would make sense why they're named Skills.
that does make sense. That does make sense. um, and another great thing on their investor relations page is just to look at their presentation. So if you go view all presentations, or you can just download that one, and it'll bring you to this, which is their presentation. So this gives you a really good idea of the company, their vision for the company. And for the sake of time, we value your time, and we think not all the slides are super important, but we'll go over a couple. Um, and yeah, so I think this one was one that caught both of our attention, right?
Yeah.
The minutes per user per day. Um, and they're beating out giants like TikTok, Facebook, YouTube. And something that I kind of was questioning about this statistic, although it's really impressive, don't get me wrong, but with an app like TikTok or Facebook, they have just so many users that I think inherently, I'm not a data scientist, but inherently, I think the bigger the sample size, the smaller the average will probably become.
Mhm.
But again, 62 is really, really impressive. Um,
Yeah, so I guess a further question there would be like how many users are actually using the Skills platform compared to these other major platforms like TikTok, for example?
mhm.
And then maybe comparing that way, because if they have like substantially less users, then maybe this number isn't as relevant as it seems.
Exactly, exactly. And I think just go download some skills games, do some hands-on research. I mean, and see how addicting it is, you know?
Do some R&D.
Yeah, some boots on the ground. Daniel, do you want to talk about this slide really quick?
Yeah, so this is slide 8, and the main thing that I really noticed here was that their 2020 revenue looks like it was $225 million. So this company is actually generating quite a bit of cash in revenue, at least. And it also looks like the revenue grew by 88% from 2019 to 2020, which is a phenomenal growth rate.
And this was a metric we were kind of stumped on earlier, but
Yeah.
we realized LTV is lifetime value and UAC is user acquisition cost. So basically, this is how, like, I think what it means is this is how much it's how much a user would like provide in revenue or I guess value divided by how much it costs to get that user on the platform in the first place. So it's pretty seems like a good return. But another question I would ask here is, what is the industry average,
Mhm.
or what is the average for mobile games? Yeah.
Okay, so like if another business was getting 8x instead of 4.7x, then that would kind of tell you that maybe Skills is not getting the best return on their investment there compared to their competitors.
Right. And I think that's actually a big deal because their whole like value prop is that they are using a different form of monetization.
Yep.
So maybe that if it that could show you that the form of monetization is either more effective or less effective. So basically it seems like there's an entry fee for two different gamers. They both pay, I guess, 60 cents. And then at the end of the day, that translates to 16 cents in revenue. And a lot of it goes to the developers, which is how they seem to monetize the game. And then gross profit, 95% gross margin, which is very impressive. Again, I would compare that to the mobile gaming industry,
Yep.
and then contribution margin of 25%.
Yeah, so what this kind of looks like it is like a tournament kind of thing where two people go up head to head against each other, and then whoever wins gets the prize pool.
This is really confusing to me because I have no idea what their games are like. So if I were doing research on this, I next step, I mean, I would happily go download some games and
Yeah.
try them out and see how it works. Um, um, and then growing developer ecosystem, number of games with over $1 million in annualized gross merchandise volume. So from what I understand, GMV is like how much it's almost before revenue. Like it comes before like the users pay that to get I guess participate in the tournaments or the games or however this business model works. And then the developers take their chunk and then what's left is then counted as revenue. So GMV is like not revenue, but it comes like before revenue and then revenue comes from GMV.
Yeah, I believe earlier on in the presentation, Skills said that their revenue is 14% of GMV. So it
Mhm.
is pre-revenue.
Right. But it's still pretty impressive. And then the last couple things we'll talk about is that GMV reaching 3.8 billion by 2022, hopefully, and revenue at 555 million. Which I would personally use this number to make some like forward price to sales ratios. But yeah, and then Daniel, you want to talk about this slide?
Yeah, this slide, it looks like so in 2022 we already saw that the revenue is projected to be 555 million. From that their gross profit is going to be 534 million. But what I'm noticing here is their adjusted EBITDA is only going to be 8 million by the end of 2022. And it's actually going to be negative in 2021 as well. EBITDA is earnings before interest, taxes, depreciation, and amortization. So that's like what the business earns before they pay their taxes, for example. So if they're making $8 million in earnings before paying taxes, then it probably means in 2022 the business is actually still going to be unprofitable.
And so if you're looking for profit, maybe this one's not for you for a little bit.
Yeah.
But
Yeah.
obviously, you can value the company in different ways without having to use earnings, which is what a lot of growth investors do.
It's what I would do in this case
Yeah,
because maybe they're spending a ton on marketing right now, and then that's affecting.
that is a fantastic segue into what we're going to look at next, which is their Q3 report. So this is where you can go and see where exactly they're spending their money. So this is their third quarter and 9 months year to date 2020 financial results. This is just a press release. You can open up the SEC filing, of course, but this works pretty well too, and they'll often give you highlights here. So have you seen any of these before, Daniel?
Literally have not taken a look at any of this.
That's why they call it first glance, baby. I did, but then I forgot it all. So, 92% revenue growth to 60 million during the third quarter. Pretty impressive. Um,
Wow.
we'll see how long they can sustain this. But I mean, remember that hockey stick graph from their presentation. Gross margin was indeed 95%, as they promised, and net loss was 42.9 million during the third quarter.
It looks like their
And
net loss grew as well. Net loss was 5 million in the same quarter in 2019. So
true, yeah,
that would be something to look at. Why are they losing more money as revenue expands? I imagine it's for marketing. That would be my guess,
yeah.
but we'll have to
Um,
take a look.
let's take a look then. Let's skip through all of this nonsense. Sorry for if I'm hurting anyone's eyes. And here we go. So this is their income statement, and this is the revenue, and this is the revenue from 2019. Cost of revenue. Okay, so I guess yeah, it's just like cost of goods sold,
Yep.
and R&D went up. Um, sales and mark. Oh yeah, okay. Sales and marketing, um, like 2.5x. Is that like a 2.5x there,
Yeah, and
roughly?
you can actually see that sales and marketing expenses are more than the company is generating right now. So they're definitely running at a loss.
Yeah, so they're actually spending more in just sales and marketing alone than they're generating in revenue.
Yeah,
Um, and what I like to do is I see like, okay, how many times greater is this? Like, say, like 2.5. And then is this also 2.5? Like, is it proportionate, or did they multiply spending by like 3 and their revenue went up by like 1 or like times 2?
yeah,
Because that tells me like, okay, they're accelerating, staying level, or decelerating their spending in that area. That's just
exactly.
how I think about it.
No, it tells you if their marketing is still being as effective as it was in the past. And
True.
judging by these two numbers right here, it looks like it's not because their marketing looks like it's probably 2.5x. That's just off the top of my head. I don't know if that's exact,
Yeah.
but their revenue has not even doubled. So
Yeah.
they more than doubled the amount they're spending on marketing, but their revenue did not double as well.
Yeah. And I think that may be a little concerning, especially considering the Rona tailwinds should have helped them, in my opinion.
That's
Um,
probably why they're spending so much on sales and marketing, and this year especially right now too, is just to capitalize.
Actually, you know what? Maybe that didn't count as a tailwind, thinking off the top of my head here, because when you're at home, you don't have to play a mobile game. You can just play an Xbox console game, a PS5, or like on your desktop, which is usually so much better than your phone.
Agreed. Yeah.
So maybe mobile actually suffered here. Interesting.
That would be
Interesting.
something to look at. Maybe look at other companies in the sector. Are they growing as quickly as, Xbox, PS5? Yeah, PS5
Yeah.
and computer games with the same level of investment into marketing.
Yeah. That would definitely be something to look at for me.
Yeah, same.
And then it looks like other income, other expenses. I would want to know what that is. It's a pretty decent chunk right there.
Yeah.
Uh, and then interest expense looks like it decreased, so maybe they're paying off some debt or something like that, which I think is good.
I believe in the SPAC, like the investor presentation on the initial SPAC, it said the company has no more debt and 250 million in cash, I believe.
Oh,
So
fantastic.
that would make sense. It looks like they took off all their debt through the SPAC deal.
Okay, yeah, that's. I feel like that's often what they do.
Yeah.
Is use it to pay down debt. So this is their balance sheet. We'll go through this super quick. Cash and cash equivalents. Current assets at 66 million, and it looks like current liabilities is 40, so current ratio over 1, which is good to see. And
We can see their long-term debt disappeared, so that's definitely what they did then. Paid off their
oh
debt.
yeah, right here. That's a beautiful site right there.
That is.
Big. So, Daniel, how much does a balance sheet factor into your decision whether or not to buy a stock? Like,
As long as it's not absolutely awful, then I'll still look at other factors. But like if liabilities are crazy, they got tons of goodwill, tons of intangible assets, then I would look away. But this
okay.
balance sheet, the current ratio is well above one. It's probably like 1.5, maybe even a little bit higher.
Mhm.
So they have more than enough cash to pay off all the liabilities that the business even has. So I don't think they're in any financial stress at all.
Yeah, it looks good to me too.
Yeah.
At a first glance, I must say.
Yeah.
Um, and then this is their statement of cash flows. Daniel, what do you think?
Cash flow statement, I mean, we saw that they're operating a loss, so I imagine their cash is coming from financing activities right now. We can see they're losing money from operations right there, 29.7 million lost, 3 million lost in investing activities. So if you scroll down a little bit, cash provided from financing, 69 million right there. And it looks like they raised 76.6 million from convertible stock. So they're diluting right now, essentially. That's how the business is growing, is through dilution, which isn't really unheard of for a company like this that's trying to expand as quickly as possible. So not really a red flag,
Yeah,
kind of
I think
expected.
I think it makes sense for the stage that this business is in, and they really just seem to be capitalizing on the market conditions right now.
Yeah. And
With
oh, sorry.
I was just gonna say there's so much demand.
Yeah. And I would actually say that I would recommend this too if I were, giving advice to this $8 billion company, to just
Yeah,
do a little bit of dilution because I think it would help shareholders in the long term. So I would be okay with a little dilution.
yeah, and then this would I get, but it's like they have to use it and distribute it effectively, and that's
Yeah.
again where I would emphasize. I would look at their marketing spend where it seemed like it wasn't that effective.
Yeah. So as long as the dilution money is going and being used effectively, then it's okay. So you would definitely have to see if it is being used effectively.
Yeah, yeah. Um, I mean, Daniel and I were kind of hard pressed to find more articles on this. You can go ahead and pause if you see anything interesting here. But there's only a few out there. Most of it was just talking about why it popped.
Yeah.
And then here we found something pretty cool. Skills estimates there are 2.7 billion gamers in the entire world. And then that $150 billion number we talked about before. And they say the international market makes up less than 10% of Skills revenue. However, Skills said it has plans to really lean into international expansion. It believes its own revenue will grow from 225 to 555, which we saw in the investor presentation. So international expansion would be something I'm looking for, how they're doing it, where they're expanding, what the competition is there. Um, and because that seems like going to be their main growth driver. And if they can't hit those numbers, then the valuation can't be justified. So,
Yeah. And one thing I will also say is the revenue is projected to more than double within the next 2 years. But as we just learned, they're spending more money on marketing than they're generating in revenue.
yeah.
So that right there tells me they're probably going to spend hundreds of millions of more dollars on marketing within the next couple of years, which probably means more dilution is coming to shareholders. So if you're looking at investing, get ready for that.
Yeah. Um, so now we talk about our first impressions. Then we talk about the next questions we would ask, and Daniel gets to kick it off because I said so.
All right. My first impression is this company looks like it has an insane TAM, total addressable market, 150 billion by 2025. Looks like they're expanding very nicely into it. They're definitely a high growth company. They're not profitable yet. So if I were looking to invest, I would be willing to take a loss with the money I was looking to invest. That would be my first glance.
Okay, so you're willing to kind of give them a shot, is what
I'm
you're saying.
I wouldn't be willing to give them a shot right now, but if I was, I would just it would be speculative to me. It's because they're not profitable. They're spending a lot on research and development or marketing.
Uh-huh.
So
For me, at a first glance, it kind of seems like it just has a cool draw for the investor. Like it's in gaming, which is like something everyone wants to get into. Everyone realizes it's a mega trend happening.
yeah,
ARK Invest, I mean, that's just like everyone's gonna love that. Um, so I would really try and cancel out that noise and just try and be as objective as possible, and really look at the numbers and treat the company pretty harshly.
Yep.
There's kind of this idea like your default answer should always be no, like just in general, not in investing. And then you would have to be convinced to say yes. That's not like, I wouldn't say it's the best outlook all the time, but it's a good kind of outlook, I think, in this kind of situation. So
Yeah.
I did like their balance sheet. I thought it looked pretty strong. I didn't love how their marketing spend didn't seem to be quite as effective. I would look into that more, but maybe give them a couple more quarters to try and prove themselves there. And I agree that if I kept looking into this and I liked it a bit more, I would have to look at the valuation. If it's not a crazy valuation, I think it could make a decent speculative play. And of course, I'd want to download the apps myself and try it out.
Yeah, for sure. I mean, valuation is very big for me. So, I mean, if you could buy this company at 200 million today, it'd be a no-brainer, right? But that's not the case.
200 million? It's like 8 billion.
I know, but that's what I'm saying. If it was 200 million, I'd be like all
They're
in,
making
right?
200 million in revenue.
I know. That's what I'm saying. Those valuation definitely is a big determining factor for me too.
Yeah, I agree. But it's hard in this market because no one really seems to care about valuation.
No, 10 times revenue is nothing in this market.
Yeah, usually that's like, yeah. So what we kind of talked about what we would ask next then. I guess that's it. Is there anything else you want to talk about?
I guess we kind of merged the first glance opinion with the what would we do next?
Yeah.
Which is fine. That's all right.
Well, I hope you enjoyed it, buddy.
Yeah, hope you enjoyed, everyone. See you later.
And peace.
I'm just kidding. I was just kidding. That's not the actual outro.
Oh, wait. Then what's the outro then?
We did it again.
Oh my god!
I was making a joke, man. I was being sarcastic. I'm sorry.
People are gonna think that this is all planned. This is just how we are, people.
We're just joking around right now.
Okay. Well, you can edit this and decide when you want to cut this off.
All right. Should we do a real outro now, just in case?